Welcome, everybody. This is CyberBulls. Welcome to 2023. Not a great day for the stock, but we're going to find out what the bulls think is happening. We're going to take a look back at 2022, but it's all about looking forward to 2023. So let's get started with the group, guys. What do you think happened to the deliveries? Is this a miss? Why did this happen?
You want to go first?
Take it away.
You want me to go? Okay.
Yeah.
So, yeah, it was a miss. So I'll just be unequivocal about it. A miss is a miss. I see, I'm a bull, but some bulls are out there saying, no, analysts forecast miss. Well, that's not how it works, right? Because if you don't have a miss, you can't have a beat. So when Tesla kills it and all the bulls are going, man, we beat by 30,000, 20,000. Well, you can't have it both ways, right? You had a number. Tesla goes for the number. They know how the game's played. It was a miss. But that's okay. They still had a record quarter. That's great. But it was a miss, and now the stock's getting hurt badly, just like it did in Q3 when they missed. Management warned about the production and delivery gap. That was good. But just on this topic, they missed on the communication. Zach specifically said, and Elon backed it up, just under 50% on deliveries. It's clear as day in the transcript. I read it 3 times. They came in at 40. So that's not just under. Just under to me is maybe 45, 46, 47, 48, 49. It's not 40 flat. So I think there was a miscommunication there. Overall, again, record quarter. I'm going to love to hear what Alexandra has to say, Jeff has to say, but it was a miss. The stock's getting punished. That's kind of how the stock market works. The stock's down a lot. So maybe some of us thought maybe, it was already priced in to some extent. I didn't feel that way. I thought we would get hit today again on another miss because the miss was big enough. We were at the low end. I think the lowest, I know Jonas had something, but maybe the lowest analyst normally 409, and we came in at 405 after price cuts at 7,500, and then we did some more price cuts, a little bit more incentives in China, and they were trying to do as much as they could, but it came still 405 again. Hard work. Great job by the team. I'm going to say that. They're working their butts off, but it was a miss, and the stock's getting hit. And as far as 23 goes, now we look forward. And the consensus, I think, I don't know what the consensus is, but for me, anything near 2 million is a great quarter, right? If we go with the 50% type of thing, so 1.8 to 2 be great. I think with the recession, this is where the wild card comes in. I think that's why the stock's getting punished ahead of schedule, because they're worried about a deep recession, right? And Elon's mentioned this, and this is has my concern. Forget the stock a minute. I'm talking about the business, not the stock. He said he's going to run the business to grow. So if he's going to run it to grow, and we have any weak on demand, then he's going to have to lower prices. And he spoke about that. Margins might have to come down. He might run it at break even or at a slight loss because we have the cash buffer just to gain market share and get cars out the door. So I get it. So that's great. If that's what has to happen, I'm prepared for it. It doesn't mean it's going to happen. He just mentioned it as a possible scenario. So it's good for all us investors to understand that could be, a scenario that plays out. That's not my base case, but I think it's going to be a good 23. It's going to be challenging because of the Fed. I believe they're pushing hard and they're not stopping. So that makes, autos difficult when you're trying to sell cars and you're dependent on loans and financing, and those interest rates are, staying high, or maybe they're going up a little bit. Who knows? So, but yeah, just to end it there, it's been a tough year. The stock's been hammered. We'll get through it. Tesla's a great company. I think they just need to do a little bit better on the communication, and they're doing that we'll talk about, I guess, the investor day in March will go a long way in restoring some confidence. And so we'll see. Excited for the new year, though.
Alexandra, when did they find out that there was going to be a miss? When did Tesla management find out? Did they find out in the last week? Did they know the month before?
No.
Is there potential for a lawsuit?
I think they found, one after the other. I do believe they will have lawsuit for misguidance. Why? Because end of October in that earnings call, it was kumbaya, pedal to the metal. We will deliver for the foreseeable future every car, no demand issue. I mean, any catchphrase was in there. Then Elon sold. Now the big question is, when did they know? That is a very valid question. What gives me a little bit of comfort, not that it was a lot, I think it was 13,500 shares, but Zach exercised his call options and purchased the stock. So that does give me a little bit of comfort. That was a little sugar in a dark soup. I mean, did I like the numbers? Of course not. I would have preferred more. But like Christian, I do want to really say the Tesla team has executed. They were put under enormous pressure. Remember a couple of months ago, but he told us that we don't have these end of quarter pushes anymore. I have witnessed now about 3 years of end of quarter pushes. This has been the biggest I've ever seen. I mean, there were lorries leaving Fremont on the last night by the tens and dozens, driving all over the place. The week before, we heard them arriving in Florida. So you could see it in the United States, how they were spreading out deliveries. Obviously, we were missing out on the last 2 weeks of China. So to answer your question, Herbert, I think they knew probably beginning of December, because that's when they hit in with the 3,750 for the US market. That's where we started hearing rumors from these Chinese sources, which they never really countered. I mean, that was another fiasco, right? I remember I was in one morning early in the car, and we had this whole situation that Reuters and other people in China had this information and nobody countered. And then suddenly, Tesla says it's not true, but in the end it was true. So the whole thing sort of got messy late November, beginning of December. I had the feeling with all this push that was going on, which was much stronger than I expected, we could make it to 420. Well, we didn't. I mean, we're very happy that we're above 400. I think actually the push got us over the 400 deliveries with the last 48 hours of even reductions in the SN and the X's. So no, I'm not particularly aggravated, because in the grand scheme of things, what is it delivering 420 or 405, right? I mean, where are we? This is little things in a very short window of time. But what it shows again is it's not only product. I know these engineers out there don't want to listen to me, but product is one part of what you're selling. You're also selling pricing, and on pricing, it's been agitated, and I understand why it was agitated with the IRA. We'll probably get to the IRA, because now that the IRA is there, it's agitated again, because nobody seems to have been prepared or had the right information, and now which car is in it and which car is not. So it just, this whole PR, this whole communication, this whole pricing, getting the product to the right point of sale, it's just still too amateurish. There's still, I mean, if the day they do all that as well as they do the product, we're in heaven, but we've got a long way to go.
Yeah, Jeff, you're the expert in supply chain. What happened?
Yeah, I mean, if you're a serious investor, I mean, it's definitely a miss. You have to just you have to look at this in like the cold light of day and just understand it. And then you step back and say, well, what is Tesla doing? I think they're close to, probably in one of the quarters this year, they'll build all of the volume they built in 2020. So in terms of like, is there real growth? There's absolutely real growth happening. The question is can you tag it to a percentage? That's one thing. On the supply chain side, I believe they actually have a very good supply chain, but a supply chain is made up of many different parts, starting from, the raw material, getting to component suppliers, all the way into their factories where they assemble product with, I think, world-class efficiency. And then you've got to get that product through a logistics system and in the consumer's hands. And, I think as you're growing at this kind of rate, if you look at the kind of capacity that they've added, I mean, I think they were at 1 million unit run rate the year prior, and now they ended the year at a 2 million unit run rate. That is significant growth for any company, especially a company with a process or product that's this capital intensive to build a product. That is gigantic growth. And they've gotten the hard parts done really well. But I think when you go from 2 to 4 facilities, there's going to be this settling period of like, where's my inventory? Where's my inbound material? What are all my logistics partners? Are they all lined up? Do I have enough? When you look at the bottlenecks of a supply chain and the whole network, you've got to look all the way through to the end, to the logistics side of it as well. And predicting, this is what a question I've gotten too, is like, when did Tesla know? I don't know. I mean, we don't know. There's many things that we don't know. There's things that people on Twitter pontificate about, but we don't know their sellout rate in the last week of a quarter. It could be gigantic. It can be 10,000 units per day for all we know. We have a good feel of what we think they're producing per day. And that has also grown. It even grew quarter on quarter, the amount of production per day. And as your production is transient, your rate of production is transient and growing. Your ability to like nail inventory between that factor and the fact, like, if you don't have all your bottlenecks worked outside of, call it X factory, in between your factory and the consumer, and those bottlenecks aren't completely worked out, you can see where nodes of inventory could be an issue. The question is you always have to ratio it to total production and number of days based on the actual velocity of your supply chain. I'm not going to do kind of like a supply chain 101 on this call per se, but there are industry standard metrics to know like when this is getting out of control. I feel like Tesla's really just building, they're massively scaling the supply chain, and they're working through the growing pains of, again, from the beginning point of the network all the way through getting the car in a consumer's hands. And this should work itself out over the next couple of quarters. But we have to watch it closely. And then you also, finally, you have to look at all inventory isn't created equal. And by the way, I think we were talking about like finished cars. There's also the amount of inventory of components is going to grow as the number of factories, gigafactories grow, and just the daily run rate of all four factories combined grow. The amount of inbound material in the four walls is going to grow. That's inventory as well. I don't hear anybody talking about that, but that will also increase. So you have to look at the inventory. All inventory is not created equal. We have to look at like what percent of this inventory actually has customer orders against it. What is built to stock? Tesla builds they build the fewest amount of cars to a stock inventory of anyone. So there's a lot of things to consider when you talk about inventory and supply chain. But I would just close 420,000 units or 418, whatever you think the consensus was, versus 405. That could have been 2 days or so of sellout between, like, just on a sellout perspective, and it's about 3 days of production. So I don't know if I was because I've been in kind of in an executive role and trying to call a quarter or call a ramp, and like, where's it going to end on December 31st? And when you've got that sellout rate and you have that production rate going at the same time, and to be able to call it within a few thousand units, I would say is very difficult to do.
Yeah, I get that. And excuse me, and I just want to add a point. I mean, we always forget that this is, spread all over the world, and 2 out of the 4 factories are just ramping up. We are both for Berlin and Austin just at 3,000 a week. We're supposed to be at 5,000, but there we are, 4,680. We hear all that. So you have actually Fremont and Shanghai still building the worldwide stock, right? And obviously Shanghai being the bigger one. Now with Shanghai having the issues they had, not being able to sell in China as much as they wanted for the obvious Chinese infrastructure related issues, these cars left too late at the ship that had the problem in Australia, where it couldn't leave the port for a couple of weeks. People in Germany still waiting for their cars, including our own Alex Voigt. So you have a couple of issues that just explain that, and that's why I'm not getting really wrapped up with the number itself. 4, 5, 420, what the heck? Because there are reasons for that. And even if you take Troy's worst case scenario, there are 71,000 cars now in transit and in inventory. That's barely 5%, right? That you have 5% of your cars that haven't arrived yet at your customer. So what? I mean, that doesn't bother me at all. What bothers me is that there's suddenly a turn of the story as if suddenly there's a demand issue. I mean, where did that come from? 2 months ago, it was like any car we build is going to be sold for ages to come. And in just 2 months, and in those 2 months, the 10-year rate went down. It wasn't, there wasn't something huge macroeconomical that happened. What happened in those 2 months between end of October, where every car was sold out for the foreseeable future, to today, where suddenly the story in the market, and it may be wrong, is we have a demand issue. And I don't think we have a demand issue. I think we have to focus on that, and Tesla has to communicate on that, because if we don't have numbers, it's difficult for us to bring anything forward.
Alexandra, just let me real quick, Herbert, to that point, because it just hit my head. I agree with you, but I think that was a little bit of self-inflicted wound by Tesla. On the third quarter conference call, they could have took and notched it down just a bit. Instead, they went to this just under 50% on the deliveries. They didn't have to do that. They could have said, look, it's been a tough year. Second quarter, we all knew what happened. If they would have just said, hey, we are going to work our butts off and we are going to go, 40% plus, something like that. That would have reduced the expectation in the investor mind in the stock, and that could have blunted when we're expecting all us bulls saying this is going to be a blowout, 430 deliveries, because they said just under 50. We can do a math problem, and it didn't work out. So I think it was. I agree with you. I think though it was a little bit of a self-inflicted wound there.
It was, and I mean that's always the issue with communication, right? And this time it's Zach, because usually when Elon says something, I sort of, knock it down in my head straight away. But with Zach, I take it to the bank. And I think I want to believe that that's what they were convinced about in October. I don't want to think this was a setup. And I really don't. I mean, obviously, do I have any guarantee? No, but I have this trust in Tesla still and in their words. So I just wonder whether they should at one moment, because you understand their window actually to change guidance is small. End of October, they say it's kumbaya, everything is wonderful. And middle of December, they can't do anything anymore from that second Friday. I think this year it was on the 15th of December that they couldn't do anything. So they had 6 weeks to communicate. And all we had from Elon was, macro is difficult, the Fed. Obviously, in hindsight, it would have been good, given that the stock went down anyway already, right? I mean, that was the moment we plunged and all looked at it and stared and couldn't believe it. I remember saying here a couple of weeks ago, well, 160 is going to hold. Yeah, sure. So I think that's probably a suggestion I would like to make to management, to just, when you have been so optimistic in an earnings call, update, please.
Yeah, and I think there's a big difference. If the quarter was flat with Q3, my first response would be there's a demand issue. Like there's something we have to go, that has to be addressed overtly in pricing and product, and those could all still be true. But the fact that it is a miss, but to me it's in the margins of, like, you wouldn't know it in October, you wouldn't know it in November, you may not even know it. I mean, you've got an issue. You certainly know you've got an issue, like when you have to put the incentives on, when you have to do certain things to drive the sellout rate higher, because you could see your inventory, your days of inventory building. So there's signals they could have gotten. But if the quarter was 350 or 360K shipments, I'd be like, there's a demand problem. I think all investors could just like face up to it and then figure out, has the company been fully re-rated for the following year? But the fact that they built almost 440,000 vehicles, versus the prior quarter, I think was 360, somewhere in that range. They were able to grow production. They wouldn't have built the 440,000 vehicles just to like flex a muscle. That's a lot of money to spend, and that's a lot of cash flow to tie up. So I actually believe that there is a combination of, they needed incentives, didn't put them on in time, and there were some logistics issues and just getting all this material out. If this ship hits, this one that departed, these APAC units, I mean, that's a different quarter. So then the final thing I'd say is there are real things happening. We have this IRA cliff where it's still, I think Alexander brought up a good point of, like, we still don't have clarity of, like, there's a draft out there, but like, if I'm a consumer, it's January 3rd. If I walk into a Tesla store, am I getting the rebate or not? I still don't know. And
it's worse than that, Jeff. Exactly. It's worse than that. Excuse me to interrupt you. There are people going in the stores at the moment in Chicago, in Santa Barbara, and nobody has a clue. Nobody has a clue.
Yeah. And they're not, and the Tesla personnel, they're not tax experts. But the question is, like, should they have been given speaking points on like how to deal with these questions.
The website is not updated. The website is not updated. I've been on the website since the 1st of January waiting for information because we have a couple of questions. There are people out there that pretend the Model 3 standard range will not qualify because it's LFP batteries. I don't know whether that's true or not. It's out there. We have the Model Y that's only qualifying with the 7-seater, but not with the 5-seater. So there are a couple of decisions to be made. Do you need to adjust the cars? I mean, that could actually be a reason why they pushed so hard for the cars, because maybe there is a slightly different version coming to correspond to that. But one thing that's for sure is we're January 3rd, late afternoon, and nobody knows. And that's just, sometimes I just sit there and go, what's this now?
Yeah, there are about three. So there were real factors going on in Q4. China COVID really cut down foot traffic. You can say, well, BYD, we don't know how many cars above 40,000 US dollars were selling at what rate, with China COVID, and then you had this IRA cliff. So it's not like there were zero issues that were also headwinds in the way. And the final thing I'll leave everyone with is there are prognosticators on Twitter, on YouTube, everywhere. The things that we in the public do not know that would be unbelievably valuable information is we do not know the order backlog. We actually do not know Tesla's order. Nobody knows that. You could try to back calculate it, but we actually don't have their order book. We don't know it. And then we don't know the causation behind all the inventory. What percent of that inventory has an order in customer hands? What percent of that inventory has actually been paid for by consumer? We don't actually know that information.
Well, reserved for. Actually, one thing I would like to know, how many of the reservations get canceled? Because with that little reservation fee, initially it was $100, now I think it's $200 or $250, people cancel. If you don't lock a customer into your car purchase at a significant amount, and now something has changed, they spend too much money, the car is not the color the wife wants anymore, or whatever, they don't mind losing $100, $200, or $250. And so that's a rate I would like to know. How many cars have been pre-configured, produced, and then get canceled at the last moment?
Yeah, and the agreed. And the final thing we don't know, which is to me maybe one of the most interesting stats, is for every $1,000 that the MSRP changes on a particular model, what is the elasticity in demand? Tesla knows this. I believe they put the incentives on to move cars. There's no question about it. But that was also a data gathering exercise. And we don't know. That's why they started at 3,750. They gathered elasticity data, and then they went to 7,500. Those are two data points. I mean, we had people on that were tracking inventory. We don't know actually what their real inventory was because we don't know what's in a factory, finished, not finished, and versus what's actually available to sell. Sometimes those are transient. So that's the final thing we don't know is what is the elasticity. And Elon and others have said, and I believe it because I've seen industries like this. For every $1,000, it could be exponentially higher. It's not a linear thing. So that would be a very interesting thing to understand somehow on the earnings call, maybe.
Or even earlier on the investor day. Because that's the other thing I think is we should discuss. Why do we suddenly have an investor day? Do remember, everybody says we never had an investor day. That's not true. If you go on the IR site, ir.tesla.com, you see that 2017, 18, and 19 days were labeled as investor days. There's a column for investor days, and there's a column, I think, for product days or whatever they call it, second one. So we had IRs, while we also had a PR department, right? That gives me some hope. So we had something more traditional. There are hundreds of corporations of huge mega cap companies out there that do investor days. And now, after a 4-year break, 2019, 2020, 4 years, we are having one again, which I am very, very happy about. Is this damage control? Could be. Now, today, somebody pointed out to me that they actually announced the annual shareholder meeting. Remember last year it was in August in Texas. This year it's already going to be mid-May, on May 16th. So we're going to have a quick sequence of two major events for investors and shareholders of Tesla, 1st of March and 16th of May. Why is that? Why do I believe this is so quick? First of all, this is going to be a major shareholder meeting. I wrote a Substack about it. You can read all about it. I'm not going to get into it, but it also includes Elon's re-election and Robin Dalholm's. So I think there will be lots of questions up there. People who wanted to be included in the proxy statement to bring up points had to do that before December 22nd, 2022. It's too late already. 2 weeks ago, it should have been done. Nobody spoke about it. It just got lost in the wind. So nobody can be included in the proxy anymore. That doesn't mean that you can't bring forward any more suggestions, but they will be brought forward without being included in a proxy statement that obviously gets sent out to everybody. So much more difficult to find support for it by doing it the second way. And that one is very short as well. Those things have to be brought forward before 15th of February. So why do I say all that? And why is this all important? It's important because people don't like the way Tesla is managed. I like it, you like it, but there are people out there, institutional people and other people that don't like it. And they may come close to a majority. Institutional holders currently have 43%. If they group together, which is very likely because it's the typical 5-6 big ones, especially since they have proxy vote advisors that all steer this, and get a couple of big investors with them, we will have quite a tight voting system, and Tesla again is not set up for it. Remember last year when they did that shareholder platform? Didn't work for most of us. Most of us are stuck in a received status. So there's stuff that has to be done, that Tesla has to get moving and communicate about. They can't just sit this out at the moment. So this, I really want to make sure everybody hears that and gets working on it.
Jump in, Herbert. You're not going to be able to talk.
Yeah, no, I mean, there's so many good topics here, and I'm just trying to pick the good one. But I can't not get away from demand. I think obviously expectation of what demand's going to what's going to happen in 2023 is the story. It's the big story. What's going to happen here, right? So some people are saying that there is no demand problem, okay? Because we were just 3% off of demand. It's all about setting expectations. We're still selling all production and all the reasons you guys brought up, the IRA, the confusion about incentives in the future, these things. There's other people who are saying that there is a demand issue. Elon himself said there's going to be a massive recession coming up in 2023. He also said that we're going to have to reduce margin to grow volume sales if we have to. It's all preparation in case of.
Possibly.
Some people are wondering, is there a reason why they did not announce a gigafactory in 2022 that they were promising that they would? And some people are going, well, maybe they're trying to not spend too much money, number one, or two, don't want to have a gigafactory to produce production when they may not need that number. I still think that their guidance was still 50%, and hitting 40% does not mean that they didn't grow, that they grew a significant amount. I still think that this is what's going to happen in 2023, despite a recession, because that's what they hit, 40% growth in a massive 2022 year, which had so many headwinds. I listed them out in a recent tweet, and there's so many more. Where do you guys stand? I want to just hear each one of you just reply to that, because I think it's important to understand the nuance of, is there demand softening in 2023? And if not, if there is or isn't, and to what extent?
Yeah, I'll go real quick. So as far as the new factory, yes, that's another point of the communication. Again, Elon mentioned that there would be one by the end of the year announced. That did not happen. So we don't know. We've heard speculation, but nothing's been announced. So either two things. They don't want to do anything because, again, severe recession, and they got 4 factories and they're ramping them, and they got the capacity and everything they need in those 4 for now, and they're not bothered by it. The second reason is, possibly, like I said, they don't need the new factory and they don't want to spend the money. But to your broader point, I think the more important point is the communication part. You started your question with the demand. The demand is an issue because Tesla made it an issue. They guided. We're just going off what they told us. Management told us just under 50% deliveries. So you can't blame Wall Street for this one. Tesla didn't have to do that. They gave the guidance for the quarter, but for end of year, so I hate to harp on it. And long term, again, it doesn't matter, but you can't complain and say it was a 3% miss, the stock got crushed. guess what? That's how the stock market works. The stock market doesn't work the way you want it to work. Like if you issue guidance and you miss the guidance by, I think, a significant fashion, and you tried to do everything with price cuts to try to meet it, and you threw the kitchen sink at it, essentially it looked like it anyway, that's a perceived problem. And that's your demand issue. So Wall Street or regular investors say, hey, there might be a demand issue. Elon's comments about next year, we might have to sell cars at break even or at a slight loss. That the CEO is hinting at demand issue, right? Like that doesn't instill confidence, whether he's warning or like these things are happening, and they will be for right or wrong developed through the stock price. It will ripple through, and you will get a new valuation based on new information. So things can be turned around, but don't look. I'm not in the camp of a blame game. The company set the guidance. They missed the guidance by a significant margin. The stock got hammered again, and then Elon's talked about weakness again. He might be setting it up for something is coming, and the stock is probably going down on that too. So in my opinion, I believe that there's not a demand problem per se, and I think IRA mutes it a bit, but I do think there is definitely a pricing mechanism here that needs to be adjusted. I believe going into this recession, as consumers get a little bit more tapped out and the Fed is not stopping, even if consumers want to do the purchase, now all the recession talk, maybe they're losing their job, like Alexandra said, maybe they thinking they might lose their job. They're like, we don't need to buy a Tesla this year. There's no rush to go buy a $55,000 Tesla or $60,000 Tesla. So there might have to be, like Jeff said, a few thousand reduction to get that incremental demand. And Elon has spoken about that in the past. For every few thousand down, you get almost an exponential increase in your demand, which would be fine to sell the car. So long way short, we can't blame everything on the media. Actually, CNBC, their head article, I was in shock, and Jeff pointed it out too. Whoever that was, Tesla grossed 40% year over year. It was the kindest, most gentlest headline I've ever seen CNBC. Yeah. They usually smash them. It would have been Tesla missed by a mile. Guy, 420, whatever, 420, 419. They came in at 405. They missed it by, it was a very gentle headline. Now, Phil LeBeau went a little bit, into it a little bit harder. But essentially, the media was fair. And again, I think it was communication. Again, this is a small thing, but people freaking out. I don't want to blame the media on this one. This was Tesla on Q3 setting the expectation and missing it. And they knew, Zach knew the production and the delivery would be a gap. He understood that. So he then, after he said that, then still said the deliveries will be just under 50%, knowing there would be a gap. So again, I'm not assigning blame. I love the Tesla team, but your stock's going to get hit when you guide, and he guided very clearly, and you miss it. So I don't know. What do you guys think?
Yeah, no, I agree with you, but I also want to defend them, because if there is one car maker out there that does have the room to lower prices to adopt, it is Tesla, right? So it's not as if, if you're in a situation like the GMs of this world and you already produce at a negative margin, what can you do, right? I mean, it's all nice to have the IRA then, but you still need to produce, and you still need to subsidize those EVs with the margin you're supposed to make on other cars, which you suddenly don't sell. I also want to jump in there, and I get a lot of heat for that I think they should get in financing now. They have now the investment grade. I think the Moody's one is coming soon as well. That will give you the double one. But even with the single one, I think they should now substitute the banks that are currently trying to get at 6 or 7% financing over 5, 6, 7 years, and allow either longer periods or preferential rates, because that is a 1 or 2% margin that costs them much less than if they have to lower the prices of the car. But for the consumer, it's a lower monthly payment. And honestly, I mean, everybody tell me, but the balance sheet. Tesla has one of the best balance sheets in the world, right? To do suddenly a little bit of auto financing is not going to ruin it. And I mean, I know everybody is traumatized by 2008, but doing a little bit of car financing, especially for cars that you monitor all the time. You see the driver behavior. If ever you have to do repos, you just click on your laptop and the car stops, right? You can get it back like nobody else. So, if Tesla is in a situation to do this in the best possible way, this should be something they should look in, and that will give them a little bit of breathing room for consumers that want it but don't want to finance currently with the banks at these outrageous rates.
Absolutely. And real quick, while it's on my mind, the IRA, this is what I would do. And Jeff has been talking about this. Like, I don't know better than Tesla management. I do not. They know way more than me, but this seems simple to me. Tesla, by all measures, would be the most company to benefit from this legislation. Now, I know Elon has a bit of an antagonistic relationship with Biden, which isn't great, and with legislators. That's not good for your business. You want to work for the government. Tesla worked with the government in the beginning to get certain things like regulatory credits. There was legislation in its favor. Elon was against the bill, but the bill's going to happen now. So why not say, look, I need a point person in my organization who is going to go to the government, and you are going to work with the government, and your only job, one of my senior people, you make sure that you know what that government wants, what the rules are, and if you don't know the rules, figure it out. How can we work with you, Mr. Government, to get the batteries you need, and what do we need to do to help electrify America if you want to compete with the Chinese? They should have it. We should know who is the person at Tesla that is lockstep with the United States government to help Tesla's business. This is what Tesla wants to do. The government has laid out something, whether you agree with it or not, it's in fair play, and we're competing. We should have a point person that is dealing with this every day, in and out. What do you think, Jeff or Alexandra? Am I being crazy?
Let me just jump in there. Sorry, Jeff, I give it to you right after. I mean, I hear all these people going, oh, government is corrupt, lobbying and all that. Yes, but if we have to solve government now to sell Teslas, that's completely out of range, right? We're not going to solve us. Government in the United States, which is corrupt, no doubt about it, but that's the way it is. So let me just recall that in 2021, Tesla did donate to government officials a total sum of $500,000 US. Ford, 10 times that, GM, 20 times that. Right? I have no idea about 2022. Obviously, nobody's surprised. Actually, I was surprised they did donate. That was my first thing I thought about. There is now a small team in DC working on lobbying. They had those job descriptions out. They're currently looking for 2 summer interns. That sounds to me, typically Tesla. This is not where their heart is. I mean, they do it because they have to do it, but that's not what you do when you have the IRA, which is the most consequential bill out there for EVs and battery makers, that you send 2 men and a leg there and try to make little miracles. That's not how it works. That's not how Washington works. Do I like how Washington works? Of course not. But either you play in this playfield or you don't. There is no halfway in there.
Yeah, and to add, first off, in your original question, Herbert, why didn't they announce the factory? I don't think there's anybody that is properly milestone tracking. I could be wrong, but like when Elon or someone on the leadership team announces something and says something that'll be done by this point in time, I'm not sure there's somebody walking around with a notepad and milestone tracker that says, look, it's December 28th. If we're not planning to get this announcement out by end of the year, we should give the public a date for a date when we are, and maybe a one-liner for what we're doing and why there is a delay. I don't think there's actually somebody doing that, and somebody should be doing that. So on the IRA, so I set up manufacturing in a number of different countries, and you have to comply with their tax laws. You have to meet with the government. There's many things that have to be done in order to enable it. And I don't think there's any doubt that some of these things are happening, but you've got to play the whole game kind of end to end. It doesn't mean like, and I've worked in various countries of various levels of corruption you could imagine all over the world. But you have to understand what that environment is. And if you decide to delight your consumers that live in that country, then you have to play by the rules of that country, and you have to do the work. You have to do the work. The work can't just happen and just get out there and say, wow, that's terrible. Look what just happened. And point it out. You can't do that. You have to be ahead of that, on top of it. So the point person, all this makes sense. I believe this is a draft of the IRA requirements. I believe it's a miss that the Model Y isn't in there as a 5-seater. It's an unfortunate. And if it doesn't get corrected like quickly, well, then we know there's something else that's wrong that needs to be fixed. But Tesla ultimately has to play. They ultimately have to play the game. Now, there's a question in the comments I thought was interesting that ties into all of this of like PE compression, what's going to go on with the recession, how is this going to work with pricing? Tesla has been improving their COGS. We don't know to what level, but COGS are at 3 to 4 main levels in their manufacturing operation: from raw material, their factory COGS, their logistics COGS, and then call it the non-bill of material COGS, or things like warranty and things like that. There's no doubt in my mind that they have been, that they had a supply-driven COVID spike over a year ago, and that's why all the pricing went up on all the models, literally $15,000 to $20,000 when you look at the price increases. There is no doubt that, in my mind, that they've worked through much or all of that inventory. And Elon has publicly come out in the summer, and I believe in September, and said that there is deflation happening in the industries that he sees. So I believe they're getting commodity deflation. I believe of all the other auto OEMs, they have the most predictable demand of all of them, even though everybody's concerned about.
Didn't he say the commodity deflation takes about 6 months to trigger through really into raw material that's then in the factory? So that will probably be now in Q1.
Yeah, and it depends. That their supply chain is way faster than that, in my opinion. But yeah, he's probably giving a worst case number for them. For a company like GM or Ford, that would be a lot longer. They could have upwards of 60 to 90 days just in dealer lot and dealer inventories. Then you have to go all the way through the factory in terms of what they're building. Why am I bringing all this up? I think throughout this year there's going to be pricing adjustments, but I believe that they have done tremendous work on COGS and that they have room.
Yeah.
The question is, Elon as a CEO, he can't just come out and say, I think everything's going to be okay. I think he's got to, I think every auto CEO is going to come out in the first quarter call and say, look, we're pricing in a slowdown in the industry. I can't imagine that there's one that's going to not call that out. But I think the tailwinds for Tesla are, you have to ask yourself a question. Are people going to be slowing down the conversion from non-EV to EV just because there's a recession? So the only data slice I don't have is what happened in the 08-09 recession in terms of cars, maybe 35,000 and above. I have the slice for the whole U.S. auto industry. It was a 36% drawdown. And if Tesla is growing without the IRA, and at the highest prices they have ever sold cars last year, they grew EV at 50%. If that rate continues, why would that rate go down is the question we have to ask ourselves. The pricing of cars are going to come down. The features aren't getting any worse. So that's one thing we have to understand is, like, what is that rate of conversion from non-EV to EV? Again, 36% drawdown in total US auto in a recession. And then it pretty much snapped back. So, I mean, those are the kind of numbers you have to kick around your head.
Yeah, I don't really expect the big drawdown. I think they will be very proactive in adjusting prices to avoid that. And I also want to make very clear, these are small temporary issues we have. This is not, the IRA, they will solve. So I don't think this is going to be something that will take a long time. And the IRA, just to say that as well, is very, very, very favorable to the battery business that Tesla is scaling. So there are positive elements in the IRA. I think the whole battery thing just doesn't get the whole focus, neither from the government nor from the other lobbyists, because I think, what does a GM lobbyist care that Tesla gets battery subsidies? So the car subsidies would have been easier to solve before the draft was out than now. Now it's going to be a bit dirty and muddy, and they may actually have to adjust pricing all the cars. make sure that they fit the box, and it's a stupid box because the car will be less efficient and heavier or higher up or whatever for bureaucratic reasons rather than for the good reasons. But I mean, if we have the best engineers we have, so they can figure this out. I wish they'd figured it out before, or would have had taken the time to negotiate with them, but it is what it is now. I had yesterday or the day before people in the space who know very well these definitions of SUV and all that, and said this is just the old type definitions. Nobody changed these definitions to exclude Tesla. It was just that the SUV has this definition, and obviously the Y is not a typical SUV. It's one of those crossovers, and so it doesn't fit in there. There's nothing miraculous about it. It just a little bit of proactive lobbying or discussions would have probably solved the issue. Now we have to solve it afterwards. So again, I'm not worried in the long term. I'm very, very happy there is this IR day on 1st of March. I'm very, very happy that the annual shareholder meeting is early. This is going to cut the wings of the people that want to mess with Tesla. This is going to help us to limit the time we are having this messy thing around. But I just want to warn everybody, until middle of February, it's going to be very messy. And there will be people speaking up that have quite high voting power, just because that's what's gonna happen. I'm actually very positive on the supply chain. More I speak with you about it, Jeff, more I understand that they have the best logistics in place. That doesn't mean it's perfect, but it's better than everybody else, and whatever is not smooth enough seems to be able to be smoothened out over time.
Can I ask a question then? Okay, so first I want to know what you guys think is going to be the Q4 earnings. What's going to show up in the Q4 earnings at the earnings call? But in 2023, okay, I see three things, right? And I'm going to tell you my prediction. You guys tell me if I'm wrong, and I want to hear yours. So one thing, of course, is sales and revenue. Then there's earnings, and then there's the PE itself. And then if we're in permanent PE compression for 2023. So the first is sales and revenue. I agree with what everybody's saying. I actually think that Tesla will be able to continue to make sales, continue with the conversion to the EVs. I think that they're going to be able to do all these demand levers to continue to catch up to any kind of reduction in a massive recession. Elon already said if he had this way with the board, he's going to promote that he would sell more and have less margin. So then that's the next question is margin. We know that Tesla has high margins, but it's going to be compressed. It's going to be lowered. There could be some surprises with the energy business, but it's not enough, I think, to be able to counter a margin compression for next year. And especially if they're trying to do the demand levers, we're going to see less margin. Then the third thing is the PE. So do we feel that Tesla's now being re-rated to be a car manufacturer? And especially if you think that Elon's being very distracted. So then it's now going to be a car manufacturer PE. So you have a low PE, lower margin for next year. Then we're going to have basically, we should see the stock stay where it is, hover around the hundreds, 200, maybe maximum 150, and then maybe at the tail half of next year. That's the worst case scenario. What do you guys think is going to happen to margin in the PE ratio? Yeah.
So I'll go real quick. And I'm not even going to go to Q4. I'll just go to 23 because we're looking forward. So
okay.
23, I was looking, a lot of 7 or 8. But with Elon saying maybe we run it at, break even, maybe we don't get quite there. So if we get this recession that where everyone's waiting for, we've been waiting every quarter, we're getting a recession, except we had like a technical recession in the beginning of half of 21. If that happens, then yes. It's a cyclical business, and if you're just doing cars. The way I look at it, and here's where I think Tesla's strength will come, and this goes to the IRA plus what they've already been doing before, the energy business, right, the mega packs. If that can grow, and if we can see it in the earnings in Q1 and Q2 as the year goes on, that could offset some, weakness in the automobile business. And if Wall Street gets a wind of that, and they can say, wow, look at these. And we've been hearing a lot of things. I'm not an expert, and I don't pretend to be one. I'm more of a generalist. But if you got margins of 30, 40% in this energy side, and now it's becoming profitable, and it's getting bigger, and the IRA is accelerating this, and you could start baking in, okay, in 3 years, this business is going to be worth X. And then you got the auto business, right? Now you could combine these. Since our valuation has come down so low to $400 billion, if an energy business could be $300 billion alone in 3 or 4 years or 5 years. My God, like we got a deal of a lifetime here. And Wall Street will recognize that as long as they can see it. So to me, that is the X factor of Tesla. Build that energy business up, especially if you have softness. Now, I'm not saying that's going to happen, but that's the way I look at it. I think Wall Street's pricing in, and the analysts have, pretty much flat EPS growth. I think most analysts are at 5 whatever, and they've been coming down now, right? Yeah. So to your PE thing, if you do 5 times 20, that's 100. Well, what are we trading at? Like 107. So, or something like that. So if you want to rate it like a car company, which I don't think we should be, but let's play it because you got to understand these things. Toyota says trades 10 times. Well, you could say we got better margins than Toyota, so we're going to give it a little bit better margin, and we're growing way better, and we got this energy business, and we got an insurance business, so all this stuff, right? It adds up. So you could say, at worst, why don't you give like Tesla at least a 25 or a 30, right? So if you could do that, we're fairly valued here, right? And then as the Fed slowly cuts, once they see everything's going to, excuse my French, crap, and the whole world's ending, and we're going into a major recession, they're going to reverse. That means they're going to, jack down the interest rates. It's going to be more favorable to buy cars. This might take a while. It may take 12 to 18 months to play out, or 24 months. But then you would get that reversion, and then things are looking better, right? That cyclicality of, okay, we want to buy cars again. The energy business hum along as usual, and it wasn't really as effective because that's not as cyclical. People need energy. So that's a long way of story of saying that's the way I'm thinking of it. So I don't know, Jeff, Alexandra, what do you think? So to your question, though, I think we have been rated down on 2 things. Yes, I think recession's being priced in. They don't believe there'll be much earnings growth. They don't believe we're going to get anywhere near 2 million vehicles. I don't know what the Bloomberg's terminal's saying. I don't think they think we're going to get anywhere near 2 million vehicles delivered in 23. So I don't think they have the earnings that most bulls have in there at 7 or 8. Like I said, it's like 5 something. And you're right. The valuation has been compressed to more as a car company based on 2 things. I based on macro, and to some extent, Elon selling shares has knocked the price down. And that's not anything against Elon. That's just supply and demand. Shares, too much supply for the demand that's wanted, right? For whatever reason.
On the float.
So that's going to knock the price down. And then just the other little things that, Twitter here and there that incrementally can distract an institution, and they want to unload a little bit more margin pressure, all these other little ancillary things that are knocking the price down. Again, short term, not to worry, but, when you're down 75, 80% from the highs, it makes people a little bit etchy. We are human people here. So, and some people have a lot of big stakes in Tesla. So, it is to be mindful. Like, we want the board of directors at least be mindful that shareholders that aren't big institutions own this company, and maybe we should just think about them and I don't know what they can do. We've talked about what they can do. Some bulls say they can't do anything. They're great. Just sit there. You got a title. You're the best. You do everything. You can't do no wrong. Of course they could do wrong. They're ordinary human beings like you, me. Everyone could do wrong, and everyone could do better. The fact that we can't be critical of a company, that's our job as shareholders, to be critical and give feedback.
Completely agree.
It doesn't mean we know everything. It doesn't mean we're saying these are bad people. But when we see something and we see something that could be corrected, it should at least be, talked about, and I think they are now eventually with this investor day getting there. And I'll shut up. Go ahead,
Exactly.
Alexander or Jeff.
Yeah, no, I agree with you. I think we're today in a scenario where most analysts are now too negative, and the stock price is too negative, and the good news can start to be factored in again. I think we're at the point, and you actually hear some of the bears say, "Oh wow, now it becomes actually an attractive stock." So that is usually the good feeling. Also, do consider the 400,000 delivered, which in reality are 440 produced. Include, what was it, 10 days closed in China and at least 2 or 3 weeks at a reduced rate with the COVID turnover and whatever. That times 4. So if you take just Q4 and you quadruple it, meaning they're not increasing anything, we're nearly already at the numbers that Wall Street now predicts for 2023. But we have 2 gigafactories that are now at 3,000 a week, but will ramp to 5, probably 10 very quickly. So, the pure inertia of what is set up No new factory, no nothing. Just what is already there will produce more. Add to that the Cybertruck, add to that some semis, which I actually would have liked to see in the tables. So I think we're to the point where I don't believe any huge negative news is going to be, now a huge factor. Did I like the 10% today? Of course I didn't. But I think we've come to a level where I don't see what else, what other bomb could be coming in. The other thing I realized, because everybody now is still talking about Twitter, they're releasing these Twitter files. Is anybody even paying attention anymore? I mean, exactly. Yeah, bring the Fauci one, because that seems to be the one you hype the most, and then let's just get over with it. So that's the other element. I just think people get tired of this kind of news. Some people may be politically motivated on one side or the other that take this very seriously, but the large majority of people couldn't care less now. So once we're at that point, I think the whole Twitter overhang, Twitter noise, whatever, was just going to evaporate. So all this to say, I'm actually quite confident that whatever expectations you currently have in the market will be exceeded, even though margins may come down. If margins come down, and do remember, they're going to do that optimized Model 3 at a cheaper price, just because the whole casting process and everything is going to be a cheaper production line. That may be a car that will sell. And I had the feeling they sort of sneaked that in, thinking, okay, the Cybertruck, will take time to ramp. We're not ready for the compact model that may or may not come. Lots of people talking different directions on that, but we can sneak that one in, on which we have a lower cost of goods and for which we can produce with a good margin at a very competitive price. Jeff.
Yeah. Yeah. No, I've always said you have to look at what Tesla is doing on the capacity front to understand where they see the coming quarters. If you hear them either reducing capex or cutting labor and letting labor go, I think those are some telltale signs. And I think there's a lot of people that watch the Apple supply chain and watch like what are suppliers doing, what's happening with orders. You don't hear a tremendous amount about the Tesla supply chain. And so if you want to do some competitive work, you really want to go in and understand what are they doing with suppliers and I believe, again, by installing the 2 million pieces of capacity and actually bringing in the labor to run at that rate, that they have a plan between, again, understanding the elasticity of MSRPs and understanding what they believe will happen with the IRA, that they're gearing up for something. They're not ramping down. And it would go against the Tesla vision as well of trying to accelerate transport. So and Elon said this on the call, basically, he didn't say their plan is to take it to zero margin. He said that, he would take it lower, to whatever's needed to drive the
quantity
volume out. He would err on the side of volume. And he kind of stopped short. He was like, I don't want a money losing business, nor do I think I need one. Need to get there, is what I kind of took away from it. But follow what they're doing on capacity would be my key takeaway. And then I have to go here in a minute or two, but I think I'd love for them to formally announce what they're doing with Tom Zhu and get that out there. I've always thought as a kind of a supply chain professional that it's been strange that 4 factories sprouted up out of nowhere and there's not one clear leader that's coordinating between the 4. Correct. Like driving, processes and growth and sharing of parts, sharing of know-how, and just who's the numbers guy or girl or them? Like, who is that person?
Well, that was Jerome, right? And he left what? Yeah.
Well, no,
so,
even when Jerome
before you
was
go,
here,
Jeff,
there was only one factory. Yeah.
Before you go, I want to hear your answer to this because this is my thinking about Tom Zhu. I think he's amazing. I've been asking for somebody like this. It's fantastic. He's going to take over the manufacturing and factories across the US and the world. But the problem is that as Elon kind of seems to be backing away, I don't know if that's true, but he seems to be less focused on Tesla. If Tesla's PE is being seen as a car company, Tom Zhu will just solidify that this is a car company, and people will not think that there's going to be bots or energy or AI. Those things are going to be less likely if they think that Elon is backing away.
Yeah, I think
what's your thinking about this? Is it net positive?
Yeah, no. Yeah, 100%. Tom is I believe is going to be the production numbers person, and he may have a sales component involved. But that is sorely needed in the complexity where the company is right now. The fact that these four factories are kind of running around, and I'm not sure who's the kind of that one person bringing it together. I always felt that to be strange. But I actually, Tesla is still AI. Tesla is still the bot. Tesla is still FSD software. Tesla is still Franz and the design team and Drew and the powertrain team. I don't believe those components will fold under this person at this point in time. I could be wrong, but I believe having a very strong operational lead is a big, big plus for Tesla, especially when you look at the factory to logistics execution, issues that they may be having. This is when you have a seasoned operational lead come in and fix all that stuff. So I think it's a huge plus.
Yeah.
Okay.
And with that,
have you seen?
Go.
Thanks, Joe.
Okay.
Yep.
Okay, thanks.
I don't know whether you've seen that, but I really hope they present us Tom Chu on March 1st. I mean, I've seen obviously a lot of videos with him, not a lot, but the 6 or 8 that are out there. Some of them even in Chinese. Not that I understood anything. I just want to get a feel. How is he when he talks? How. But he seems really. There's a video out there where 2 years ago he showed a Shanghai media group the factory and discussed what's going on. I mean, he's very passionate, very to the point. So I'm really looking forward. And I mean, obviously, anybody coming in won't have the charisma and the craziness and the loveliness of an Elon. That's for sure. But that's not what's needed here.
Yeah.
What's needed here is somebody that executes and is absolutely passionate about it and gets those 4 factories working as well as possible.
Yeah. And I just want to say real quick, this is a general point, but I think it's important. And I even forgot about this. Remember Tesla of old, Elon of old, when their back was against the wall, right? And Elon was at the factory. And I watched documentaries and this guy was crying. He said, push harder. We need to get this done. We need to get so many deliveries by this quarter. I remember seeing that. And that's what made Tesla so special. I think the company did so well. The stock did so well. The employees did so well. You might have lost some of that, right? And maybe Tom Zhu, I don't know how you say exactly, like he comes in and gets back to focus, say, hey guys, I know we're, king of the electric vehicle hill, but we got to now battle down. We got to be executing at the highest level. Get that fire back. I think Tesla, and especially with Elon with Twitter, I'm not blaming Twitter. What I'm saying though, any reasonable person would say that he is distracted because every minute he's dealing with Twitter, he's not dealing with Tesla or SpaceX or what he was doing. That is just obvious if you have any type of brain cells. If he's doing one thing, that means he can't do this thing. So I think we've lost some of that fire. We've lost some of that direction as a company. And hopefully now as the stock has come in and now some moves are being made, Tom, and we're doing Investor Day, maybe we can get that fire back, that energy back. I think we lost some of our mojo. Some of the investor base is a little bit down. Again, for whatever reason, there's a lot of things that have been going on. We have to admit it. Whether you want to talk about it or not, if you want to say, don't talk about it, you're emotional, whatever. It's not emotional. It just is. It's not right, wrong. It's just facts. Look at it. Like things have gone on that is not normal. And we're dealing with them. And you have to be critical, because if you're not critical, nothing will change. And if nothing changes, we're going to be here 6 months from now, because I've been in jobs. And guess what? It's been going terrible, but no one cares because we'll just keep going terrible. We're familiar with terrible. I'm not saying Tesla is terrible, but I'm saying sometimes you need a little bit of a kick to say, hey, we could edge this up a little bit. We're kind of we're comfortable. We need to get uncomfortable again a little bit and get going again and start. I don't know what I think you know what I'm trying to say. Go ahead, Alexandra.
I do, and I also this stock decline obviously gave suddenly a new spring feeling to all the Tesla Qs, right? I mean, you have even here in the comments, you have people that are doing nothing else and criticizing Elon, criticizing Tesla, whatever. I'm not saying we shouldn't bring suggestions. I'm the first one to do it, and I get a lot of heat for it. But there are people that are now emboldened to say no matter what. And in really, I mean, in the craziest forms and whatever. And that brings morale down. At the same time, you suddenly have those bears that have the ear of the Wall Street Journal, like Tony Sacconaghi, who seems to be in it like every other day with his thesis. His thesis is not bad. He's actually yesterday morning acknowledged that at this price, Tesla becomes a buy, right? Which is never been. But he's just, everything negative is out there and is listened to constantly and again and again and again, and that emboldens people that, obviously freedom of speech, they can say what they want, but there is really some crap out there that doesn't deserve to be out there.
Okay, let's talk about the Investor Day. I don't know if you guys can see this, but it's very interesting. March 1st, right? Coming up very soon. But look what it says. It says, our investors will be able to see our most advanced production line, as well as discuss long-term expansion plans, Generation 3 platform, capital allocation, and other subjects with our leadership team. So this is pretty exciting. This is bullish. First of all, they're talking about the Gen 3 platform already by March 1st. That alone should be a huge bullish sign for us. We should be very excited. Gen 3 is going to be the lower cost, either the lower cost robo-taxi or lower cost car or other form factors, right?
Yes.
Long-term expansion plans. So it sounds like it's not expansion plans, not just plan. It sounds like there's going to be probably mining, probably multiple gigafactories. And then your favorite topic, Alexandra, capital allocation. What could this mean?
Could this be the master plan part 3 that he's been trying to get around to, essentially laying the roadmap out for the next 5 to 10 years?
Yeah, it could also be buybacks. It could be a couple of things, right? I obviously love every word of this, and I'm very pleased and I hope it was Martin who convinced them to do this, because what you have to understand is Elon doesn't want to do this. Nobody wants to do that. But when those numbers became final and they realized that this is not going to be appreciated immediately by the market, they have the 16th of May, the annual shareholder meeting, because that was announced in the Q3 2022 10Q. So that's out there since October. They couldn't change that anymore. So you have in October that set date of the 16th of May. You have beginning of January these numbers that are not so. And then they decided, okay, what do we do between now and the 16th of May? Well, guess what? That's the 1st of March, right? That's how this whole thing happened. Also on the 1st of March, the proxy statement is out. People will know what they're going to vote on for that annual shareholder meeting. Okay. So, and they are throwing everything against the wall here, which is wonderful. They're going to show us the production line. They're going to talk about the master plan part 3. They're going to talk about capital allocation. They're going to talk about Gen 3. So everything is out there and should make investors happy. And that's what they want and need. They need those votes. That's when those proxy questions are on there. And that's when people will decide how they're going to vote a couple of weeks later. This is a roadshow. This is really, they're showing their best. And the fact that somebody understood that this is necessary warms my heart. I know. I see you me. There she goes again. They understood it. They heard me. I'm happy.
Well, okay. So I'm a perpetual optimist, guys. So I know the terrible downside that's going to happen. Even Elon talked about that there's going to be a massive recession in 2023. This is the way I think of it. 2022 was a terrible year. I can only imagine 2023 might be equal to it. Maybe worse, but some people are telling me it's going to be worse for sure.
It was 3 terrible years. We've been terrible since 2020.
Okay, so
21 was a good year. 21 was a good year.
Oh, the stock exchange, but not for civilization. Yeah.
Oh, this is about civilization. I thought
civilization. Yeah, talking about Tesla. The macros are hitting Tesla, right? But I think 2023 could come out really, really well. I mean, okay, it's not going to be as bad as what everybody's saying. The reason I think so is like, okay, so number one, okay, so worst case scenario, I think that the recession happens. There's going to be a huge hit. People don't buy. Tesla's going to continue to sell. Next year, all the other car companies are going to be suffering, and Tesla's going to have more cars and more people because they cut the margin. That's worst case scenario, right?
I think what you're trying to say,
That's not so bad.
at some point, the light will shine, right?
And
Even if it's
it'll
like
help
end of
Tesla
23, beginning of
accelerate.
24,
Yeah.
the Fed will cut, right? Eventually, people will buy cars again in droves. They're going to buy Teslas because it's the best product. That's what you're trying to say. There is a light at the end of the tunnel.
Right. And I think that if there is a recession, what is Tesla going to do? They're going to start to, they're going to sell less cars. So they're going to put those batteries into the energy business and grow that. And so while it may not,
they'll knock down price and gain market and gain share.
With a huge tax refund, Tax refund.
So they'll get more margin. They'll be able to sell. And Elon has already said that the Tesla energy is unlimited infinity demand. So, that one's not going to be impacted by recessions.
And the other thing is, if they gain share, right? Maybe you don't make as much on the margin because you're trying to get them out the door. You always have that unlock on FSD later, whether it's subscription or they want to buy it outright, whatever. So that's that, cartridge ink comparison that some people are making that maybe in 2 years are going to pay huge dividends when that revenue just, that software update happens and Wall Street goes, whoa, what just happened? They just hit 1 million cars, just got this thing. And it was all to the bottom line, right? So that is
Cybertruck is coming, and as far as we know, as of today, we haven't heard any delay. But let's say it does come in the third quarter of this year. Jeff left, but he calls it the recession buster. He was calculating the numbers, and he said that basically it doesn't matter if there's a massive recession. Tesla's Cybertruck going to sell enough numbers that it's going to be able to counter any kind of reduction in any other kind of car.
Because the initial demand is incredible,
the fact that they're talking about the Gen 3 platform, I hope it's not, they've made progress on it because they started working on it last year. That could be a surprise for us. And I think they're going to create different variations of the Cybertruck at some point. But, there's all these things that can happen that hopefully will ease the issue next year. And then the pivot, right? If there is a pivot, and it very likely will happen sometime next year, then growth stocks will go back up again.
And I can tell you one thing. The other car makers are going to suffer very quickly. Remember that car dealership guy that was on those spaces last week, how he is really concerned? Car manufacturer and their unions are the biggest political influencers. I know the Fed is supposed to be independent, but that only goes to a point. If the used car and the car business as a total is really in danger, they won't care about house pricing anymore. I know at the moment they would love to get those house prices down and then before they pivot. But if car, which is the second biggest asset in the United States, if cars become really under stress, they may forget about the housing and pivot earlier.
Pivot earlier.
So keep an eye on the competition, who is in really bad state. I mean, we seem to suffer, but look at GM, look at Honda yesterday. I mean, as the second you zoom out a bit and look at the other ones, and I don't want to really compare Tesla to any car makers because for me it's not a car maker, but the stock market does, right? So if you compare to others, it's nothing. I'm actually looking forward. Middle of February, I'm going to do my table again, comparing everybody. That's going to be something.
This is my point, by the way. Christian and I were talking earlier, and we're like, do not let the narrative change. Do not let people, even though you see the PE and the bears are saying, no, see, the Tesla is a car company and that's the proper PE ratio. It is not the proper ratio. And let's go and make sure we communicate that to everybody.
And the same is don't run into this. It's a demand issue question. I mean, I hear it too much. Exactly. And let's just wait and see. Should they straighten out IRA? Of course. Should they better communicate? Of course. But this is all low-hanging fruit. The big story is there and it's still intact.
And then the final thing is Twitter is temporary. It is temporary. So yes, we're suffering every day for the last 3 months. The stock price had a huge hit because of that. He's going to get a new CEO. He says he'll have it. He's already, good news, right? It's already cash flow neutral. He believes it'll happen in 2023. He's got a plan. He's going to move on and put Twitter behind it. It'll still be lots of, you know what? I actually think that because he's hammering us with so many political controversial statements, because he does it so often now, it's actually becomes less impactful. And we're like, okay.
Well, eventually we'll get numb to it. We're not quite there.
That's true.
So,
but it's true. And just to, these are all positive things, and I'm glad we're ending it on positive stuff. But at the same time, to people out there that want to say, we can't comment on these things. That's ridiculous. Of course you can. Like if you own a piece of a company and you're a shareholder, you have a right to speak your mind, just like the ones that want to push back on you has the right to speak their mind. I don't think anyone should be, talked down or you're not a true investor or just wait 50 years and everything will be all right. No, that doesn't work. We're allowed to express our opinions and
Exactly.
have a little back and forth. Yeah.
And the same way we're allowed to speak, they're allowed to not listen. Go somewhere else.
Yeah.
Nobody needs to listen to us. And I mean, I'm a little bit tired of this. Don't say this, don't say that. Go somewhere else. Listen to somebody else.
Yeah, we'll cover this next time, but I actually think that the retail investors have made an impact to Tesla management.
I hope so too.
So you can probably go to do the list at this point, but there's been quite a bit. So there's more to do.
Yep.
Okay,
Always.
Everybody, thank you very much.
Thank you,
Herbert.
See you tomorrow, Herbert.
Yeah, see you
Take
tomorrow.
care. Bye-bye.
Bye.